Hi guys, this is the last video in the series called Accounting for Law Firm Retainers. Now, as I promised before, I am sharing the do's and don'ts when it comes to accounting for law firm retainers. So, let's start with do's. What are the things we should do when we are tracking law firm retainers? Number one, have separate bank account established for trust funds versus your business operating account. So it's what it says. Basically, have a separate bank account if you're receiving trust funds slash retainers. Do not deposit your company's money, the income that you have already earned, into trust fund bank account, and do not deposit trust fund money into your own bank account, your company's checking or operating account. That's number one. Number two, account setup. So before you start tracking retainers or trust funds, make sure that all the items and accounts have been set up accurately. Now, I've posted three videos before this one that tell you in detail like what kind of accounts and items you need to have set up in QuickBooks before you start tracking retainers. So follow those videos and set them up correctly. If the setup isn't correct, then all the accounting on the back end is going to be a mess. And of course, you have to spend time then to clean it up. Okay. Number three, supporting documents. Always keep supporting documentation for all the money that you have taken out from trust fund. You should do it for your own bank, your own account too. But then right now we're talking about trust fund, and it's much more important to do it with trust funds because you're managing someone else's money. So that's number three. Number four, very important one, three-way monthly reconciliation. At least on a monthly basis, you should reconcile your QuickBooks Trust Fund bank account to the actual trust fund bank account statement. Those two things have to match, just like a ordinary reconciliation, ordinary bank reconciliation. Okay, those two things. The third thing that comes into play is trust fund liability account. Now, this liability account has to match the other two as well. So these three things must be reconciled on a monthly basis. One, your trust fund bank account in QuickBooks. Two, your actual bank account statement. Three, trust fund liability account. All three at any given time should have the same exact balance. Okay, now let's move on to number five. This paired with three-way monthly reconciliation is the key to having accurate balances for clients. So, review client balances. At least on a monthly basis, generate detailed balance report for each client. Make sure that all the transactions that belong to each client have been posted accurately and have balance for each client is accurate. Now, this is really important even if three-way reconciliation matches. Reason being, your three-way reconciliation would still match even if you have posted client A's disbursement to client B's account. Okay, so this is very important too. Now, last one is regular statements. Send trust fund account statements to clients on a monthly basis. This maintains transparency with clients. And if there's a discrepancy or something, then clients can bring it up too, and you can resolve it on a timely basis too. So these are all the do's. Now, don'ts. One, do not commingle funds ever, ever, ever with your trust fund. So IOLA slash trust fund account money should go into trust fund bank account, and your company's money should only stay in your bank account. So don'ts. Do not ever commingle funds, meaning do not deposit your company's money into trust fund account or trust fund money into your own company's bank account. They should always be kept separate. Okay. Now, overconfidence in your accounting or systems. Do not assume since you're using an accounting system like QuickBooks or a third party software like Clear or something that the trust fund balances are always going to be accurate. So don't ignore the reconciliations ever. Always reconcile the account to make sure that everything is accurate, the balances are accurate. Number three, ignoring discrepancies. Now, any kind of discrepancies that come up with trust funds while you're reconciling the accounts or anything, do deal with it immediately. Do not ignore it. Never ignore it. So always take care of it right away. Next one, unauthorized withdrawals. So never withdraw the money from IOLA for any purpose which is not authorized by a client. So if you are supposed to pay to a vendor on behalf of the client, make sure it's all like authorized. It's not just you are randomly making payments from this account for whatever. and then thinking that you could reconcile it at a later date. So never withdraw the money, never pay it to anyone without any authorization. Okay, non-compliance. Don't disregard federal and state compliance laws when it comes to trust fund accounts, as consequences could be really, really, really bad, and consequences could result actually in um, fines, legal action, damage to your professional reputation. So pay attention to these don't do's and don'ts, and happy accounting.